Hey guys, it's Ashley Brown, your trusted realtor with Long and Foster Real Estate. Today my special guest is back, Ryan Furman from Prosperity Home Mortgage, and today we're going to talk about the process of getting pre-approved. Hey Ryan, thanks for being here today. I'm excited to have you back.
Well, thank you so much again for having me, Ashley.
Ryan, what documents are required for people to apply for a loan, and what's the turnaround and processing time of these documents?
So that is a great question. So generally the first part of the process that we would do is it kind of depends on your employment. For instance, if we have somebody that's a W-2 pay stub, where basically you get taxes taken out every 2 weeks and you receive a pay stub either weekly, bi-weekly, monthly from your employer, we would then consider that a W-2 pay stub buyer. With that kind of situation, generally we would need your 2 most recent pay stubs, as well as your last 2 years of W-2s, as well as 2 months bank statements to see that you have the assets needed for closing, down payment, all of that. The other part of the process would be is we are going to run your information with a credit report to see exactly what your debts are, because that kind of comes into play of obviously what those debts are and determining what's called your debt to income ratio, or what is the amount that we can get you qualified for. The other part about that too is there are minimum credit scores required in order for us to be able to finance and offer loans. So that also comes into play with that. One thing that's a little bit different if you have somebody that's self-employed that owns their own business or is a consultant of some sorts and they get 1099s, generally we would have to have a 2-year history of that person being in that industry. So for instance, you couldn't go from being a baker to a plumber within the 2 years and kind of use both of those incomes to qualify.
Right.
You have to be both either the baker or the plumber for those 2 years.
So consecutive.
You got it, in that industry. And what we would have to do is average out that income for the 2 years. Now, we also have programs out there to where we can use somebody's bank statements to qualify them. It's a little more of a non-traditional product with a little bit of a higher interest rate than you would.
Okay.
But it's one of those things, for instance, if you have somebody that can't show a lot of income on paper, that's an option for them that we can use the bank statements to get them qualified as well.
Okay, so it's safe to say that if you have a consistent employment, you have a really great chance.
Correct. And even a lot of times when we do an application now, if they're a W-2 pay stub employee, we actually get a copy of their verification of employment once we do run the credit report and run the loan through our decision engine. And then we have all their income information right there as well too. So it's one of those things where technology is definitely helping making this a little bit easier, and also then helping the process of getting somebody approved that much quicker.
Wow, that's good to know. Awesome. Now Ryan, can you explain to us here the loan approval process and then the time frame for the approval to funding?
Absolutely. So basically, if we're doing just a regular pre-approval to get you pre-approved, let you know what your budget is, where you're trying to keep your monthly payment, what I'd be able then to do is tell you exactly what that price range is going to be.
Okay.
I would then basically coordinate with Ashley to say this is the range of the properties we should be looking in to keep your monthly payment at that point based off of what you want to put down for the down payment and what you want to have your estimated monthly payment for the life of the loan. Generally, that for the pre-approval is going to probably take maybe a day or 2 tops for us to get that back to you.
Okay.
Now, once we get the pre-approval back and you're out there shopping, that's when basically you could go out and then basically put an offer on the property and then move forward.
All right, what are the eligibility criteria for loan products and how do you determine qualify?
Great question. So each loan type has a minimum credit score for us to be able to offer financing. So with FHA and VA, we can go down as low as a 580 credit score. With conventional products, most time we need a minimum score of a 640. USDA, we need usually a score of a 620 in order to offer that. Most of the down payment assistance programs also require a 640 credit score. Now, one thing to keep in mind if we're looking at a conventional loan, generally the higher your credit score, historically, the better your interest rate is going to be. Whereas a lot of times with a VA loan, for instance, it's more eligibility based, meaning that you have to be a veteran to get that product. It doesn't have as much bearing on the interest rate with the credit score. So it's a little bit different between each product. And that's why kind of the first thing to always do if you're thinking about buying a house is obviously reach out to a great realtor like Ashley, but then have Ashley get you in touch with a lender like myself to get you pre-approved so you know what your buying power is. Once you're qualified, we would then issue an approval letter, and we would then send that approval letter to you and then also to your realtor, so we know that those are kind of the parameters to follow in order to basically find the price for the house that you want. Generally, a lot of times what we'll do is come back with a max amount that you're approved for, and then we'll kind of work with you to see exactly where you want to keep that monthly payment. and then Ashley and I can kind of work together to figure out what that's going to be purchase price wise, so that we're looking in the right range for the right property and not having one that's higher or lower than where it should be. This is going to be the one that's going to meet your needs long term to keep that monthly payment in the right amount.
Absolutely. Now, Ryan, are there any fees included with the loan? Obviously, there's closing costs. So can you break down all the fees that are included?
So with a loan, there are fees. Now, generally, the fees for a loan are going to be due when you go to closing. So always keep that in mind. The only thing generally you're going to pay out of pocket for with a mortgage would be, once you go under contract, is to submit your contract over. Is a lot of times they do what's called an earnest money deposit, which usually on average is like 1% of the purchase price. And what that would be is it's a check that you're going to give basically to your realtor, to Ashley, and then she's going to submit that with the offer. What other fees that are associated generally with doing that purchase is, once you go under contract, the most things that most people usually do, the first thing is a home inspection. A home inspection, depending on the type of property that it is, if it's a well, if it's a septic, if you need water tests, it could go anywhere from $500 to well over thousands of dollars, depending on what, home inspections you want to do on that property. Those are things that you would have to pay out of pocket. The only thing really out of pocket you would have to pay for us on the lending side is the upfront fee for the appraisal, which is $525. This also goes towards your closing costs. The home inspection does not, because the home inspection is just for your information only, but it's very good information that you're going to get in that home inspection.
Absolutely, and all of these fees and costs, they will be breaking down for you when Ryan goes ahead and gives us that loan approval and we look at the homes and you're estimating on what you're going to be paying for that home.
So any property that you would be interested in, say for instance, you guys call me on Saturday and Ashley says, hey, we found a house we really, really like. What I'm going to do is basically get the address information, talk to Ashley about what she thinks you guys should offer on that property. Then I'm going to basically work up what's called a loan estimate. That loan estimate is going to give you a breakdown of all the fees, all the costs, the monthly payment, the interest rate, everything that you kind of need to know to make the decision if that house makes the most sense for you. This is part of the process where working with a really good agent and a really good lender that work well together comes hand in hand, because we can make it pretty much seamless for you, make sure that you're not over offering or under offering, kind of give you the best advice, as well as give you all the information you need on paper to see how this is going to work out financially, for not only now for the money you need out of pocket for closing, but also for the long-term aspect of that monthly mortgage payment that you have to make for the next 30 years, 15 years, 20 years, whatever. You're going to know then for sure that this is going to be the right house for you.
What special programs are out there and available for first-time home buyers?
So there is a lot of programs that are out there. There are some grants specific to Frederick County that we can take part of. There is the Maryland Mortgage Program. It works anywhere in Maryland with pretty much any type of property. With that, you can get down payment assistance from the state of Maryland that can be used by you to purchase a house. The other thing generally with that program is you have to be a first-time home buyer or not owned in the last 3 years. So those are the couple of things to kind of keep in mind. And these are things that I would sit down with you and kind of explain to you what are the benefits of a down payment assistance program and what may not be the benefits of a down payment assistance program for you, for your particular needs.
So at the end of the day, contacting a lender first is going to be the first step, so we know how much home you can afford, and obviously giving you all the options and the programs available for first-time buyers.
That is correct.
Really great information today from Ryan, guys. Thanks so much again.
Oh,
Ryan.
my pleasure. Happy to help anytime.
Now, I hope some of you guys found this video helpful and even inspiring. Make sure to join us next time, as Ryan is going to be back with us again, and we're going to get down into specifics of loans, and we're going to talk about FHA loans and conventional loans. You don't want to miss out on this important information, so make sure to like, subscribe, follow, and share. Now remember, guys, if you're looking to make the most of this incredible market here in Frederick County, make sure to reach out to me, Ashley Brown with Long and Foster Real Estate, and my lender, Ryan Furman. I'm here to help guide you every step of the way, ensure a smooth and successful experience. So until next time, stay positive and keep those dreams alive. Bye for now.